Yeah, I keep coming back to India. I guess you might say I have a love affair with the country. I started a company about 25 years ago with 4 fellows from Coimbatore who had come to California. So I started coming to India maybe about 3 or 4 years ago, but I feel like I've known India, grown up with India for at least the last 20 years or more. Do you guys have the slides coming up? Maybe? Clicker. Oh, okay. Technology. Great. All right. Oftentimes I've done a bunch of different presentations about startup metrics for pirates and pitch decks, and started doing more stuff on the investor side. Actually, one of the things that I think is really exciting about India is I think there's always been a lot of talent here for starting companies. There hasn't always been a lot of investors. That seems to have changed. There's a lot more people investing at every stage in the country. I know that because people are starting to turn down our offers now, which was kind of surprising. So we have to work harder and kind of, do a little bit more work here on the ground. I think Pankaj and Shalini and some other folks are trying to help us out with that. I travel a lot. I'm probably in about 20 countries around the world every year. At least 6 months out of the year, I'm on the road. Just got back from the UAE and from Turkey, where we launched a new fund. And so a lot of times I see and hear different emerging markets, and emerging markets, kind of a really bad name. What I really think when we say emerging markets, what we really mean is fast-growing markets. Because in a lot of cases, those markets have already emerged. There's nothing that's still emerging other than more growth. But in a lot of emerging markets or growing markets, there's still some pieces of the ecosystem which aren't always in place. And so, at least from going around the world, there's some things that I think are maybe similar from environment to environment. I don't think most of those are true anymore in India. So even though I'm going to present 10 challenges, I'm probably going to debunk each of them as we go through. A few folks were asking, I guess you were asking what a Sith Lord is, and I think probably most of you, how many people are Star Wars fans in here? Yeah, so, oh, okay, maybe not. So the equivalent, I think, of a Sith Lord in India is probably Gabbar Singh. Kitne startups day. I think he's probably an admired villain. I'm not quite sure I know all the history, but he certainly, I was told that this phrase, at least, or the modification of that phrase is common. So the first challenge is, of course, that there aren't very many investors in emerging markets, and of course, most of them are evil or stupid. I'm talking about myself. But in a market where there's a lot more demand for capital than there is supply, or at least the likelihood of that capital being supplied to you, the investors hold all the cards. Now, they may not necessarily be evil by nature, but their actions may seem evil to entrepreneurs. And they may try and take 51% or more of your company for a very small amount of money. And that still happens. Investors, generally speaking, make lots of investments. Entrepreneurs probably, they handle one investment, maybe at best once a year, probably maybe only once every 5 years. So there's a lot of asymmetry going on there where the investor really has a lot of leverage. Now, as that starts to change, as there starts to be more entrepreneurial success, as there's more competition for deals, more investors, then there's going to be a little bit better behavior on the investor side. I think one thing that bothers me is still people ask for business plans and revenue projections, and it's almost like you're asking for entrepreneurs to lie to you. Could you please give me your 5-year revenue projection? It's just an opportunity to lie. It's just like, oh yeah, it's going to go like that. It's awesome. Of course, I'm going to be a unicorn. So I always say, actually, I don't want to know the business plan, because the business plan is really, it's a long succession of probabilities that you're trying to predict. And startups, the next step is probably not going to happen as you think. And so most of startups is not like me walking in one direction continuously as I predicted. It's me walking one step and then taking a step back and maybe 2 steps forward and maybe another step back, and you're testing almost all the time. Right? So a business plan is really this low probability event that you're projecting out for several years. And all I really want to know is that you've got a product that customers might want to use, and give me some data around that. Maybe the unit economics, maybe you're telling me about what the KPIs are that I've already accomplished. But in most cases, I just want to know that you've got something working and that there's a plan for growing that. And so marketing plan maybe, and some unit economics, but I don't need a business plan. And expense projections, if you're going to lie to me, at least lie to me about the money you're spending, not the money that you're making. All right. However, investors are not the only dumb people in this equation. Actually, it's probably an interesting question, who fails more often, entrepreneurs or VCs? Because both of us fail a lot. Even really great investors, maybe you get exits 20 to 30% of the time. You don't get big exits, probably more than 5 to 10% of the time. So it's arguable that entrepreneurs actually succeed more often than investors. However, again, there's a lot of mentorship and a lot of experience needed. Again, I think this is changing a lot in India. You have very large companies now, Flipkart, Snapdeal, Ola, many others, and they're starting to have a second generation of entrepreneurs, and those people are investing and advising other entrepreneurs. Now, there's still maybe challenges in a couple of areas that aren't maybe as common. I think there's a strong engineering tradition in India. There's probably still more work to be done and more experience to be had in product management, in design and user experience, and particularly, the thing that I'm trying to focus on a lot is how do you grow the company, and that's not traditional marketing. That's probably analytically driven marketing, understanding how you generate a volume of leads from a search, a social, a mobile platform, multiple different fragmented marketing channels, and how do you use the unit economics and a financial equation to predict when do I get revenue, how much revenue do I get, is the business on a unit economic basis profitable, and should I even try and grow it? Or can I grow it with equity, or can I grow it with debt, or can I do it bootstrapped out of cash flow? As successful companies get big and have exits and start to invest in more, you're going to see more experienced entrepreneurs, and they're going to have more mentors to help them grow. This one's definitely not true anymore. I think when we started investing in India maybe 3 or 4 years ago, and in other places around the world, we had a lot of questions from our investors and from other people in the market about, well, where's the historical exits in India? Or where's the historical exits in Brazil? And of course, the answer is going to be there aren't very many, because you're looking backwards at the past, not forward at 3 billion smartphones, or in this country, 300 million smartphones. And so expecting to see a historical set of data that's going to predict the future when so much is changing on the ground is sort of like, looking up your own asshole for predictions about the future. And excuse me again, I'll try and limit the 4-letter words. But I think you should not be trying to predict the future based on a past that has fundamentally different things on the ground. So there are big companies in India. There are lots of customers in India. Those customers have rising internet penetration, rising spend, payments getting better, logistics are getting better. There's just lots and lots of positive things that are going to point to a big future. And so I don't think you have to go to the valley to be successful. In fact, you probably don't need to leave your own large tier 1 or tier 2 city to be successful. India is a very dense country. There's customers everywhere. And most of them probably have access to the internet, at least on an intermittent basis. And more they're going to have access to the internet all the time. So even though some might consider India an emerging market, it's probably one of the biggest domestic market opportunities to go after, and I don't think we have to convince people of that anymore. Even in the US, people see that there are big companies coming out of India, and just being in India is already a global business. Okay, here's my big thing, is that we are in love with products. We are in love with features. Generally speaking, the engineering geek, again, I count myself in that area. We like to build stuff. And then we think about sales and marketing as an exercise left to some person in the sales department who I'll hire later. And I don't really have to worry about that. That's the dirty, dirty job that the sales and marketing programmer. I used to think of sales and marketing as a necessary evil, that really we had to tolerate to build this tech company. And now, as I am, no longer a programmer and I'm running the business, sales and marketing are incredibly important. And in fact, they're not just an execution-oriented task. It's something that really tells you about the psyche of the customer that you're going after, and it's almost fundamental in how you build the product. In fact, I'll say that again. Sales and marketing and an understanding of the customer are fundamental about how you build the product. You shouldn't start coding before you have an understanding of the customer. Now, the thing that's really great about building businesses on the internet is we can measure a lot of stuff. There are lots of people online. I can acquire a lot of my customers with an incredible amount of digital leverage. I don't necessarily have to scale my sales team to scale my customer base. I can do lots of different marketing via search, social, mobile, visual, email, affiliate, all kinds of channels in addition to traditional television, print, radio, etc. And so my challenge is I now have many different marketing techniques to figure out how to acquire customers, and I have to get experienced in those. But if I have experience in those marketing channels, I have incredible leverage, as Archimedes might say, to move the world with my knowledge of understanding of marketing channels. In fact, what's changed the most in the last 10 to 15 years is not technology. What's changed is the way that we communicate to each other and the marketing platforms that we have access to now. Instead of reading newspapers and listening to radio all the time, we look at our phones. We share information on social platforms. We look at pictures of things that then inform us about those things, that we might then buy those things, that we might then tell our friends about those things, whether they suck or whether they're awesome. Right? So the whole challenge of growing a business is not as much about building the product. Yes, we want you to be an accomplished developer or a great designer and build a product that people love. But then you need to tell them about it. Right? And it's not going to happen just by itself. As much as people might say that word of mouth and great products sell themselves, I find that rarely to be true. And so the amazing thing is the distinguishing characteristics of a lot of successful startups these days are not necessarily great engineers. Those might be necessary but not sufficient. The actual differentiation often is around design and the understanding of the market and the consumer, and really how to figure out analytically driven marketing that scales. So a compelling product is the first step, but scalable path to marketing, hopefully profitable unit economics, also very important. And again, you know, a lot of people criticizing emerging markets. Well, there aren't many exits and most of them are small. Where are the unicorns? Well, India has probably 8 or 9 unicorns now. There's really big investors coming from other parts of the world. We have SoftBank coming from Japan. We have Alibaba coming from China. We have Amazon effectively coming from the US, investing in its own business over here. There's lots of eyes and attention on India that are not just from India anymore. There are non-tech companies who realize their businesses are under threat, and they're going to have to either buy or acquire technology to be competitive in those markets. So I think more and more it's not just about a local tech company acquiring another tech company, it's a global tech or a global non-tech company acquiring those companies. And those are increasing opportunities to find exits and bigger exits. Another reason why people don't necessarily put money into startups is real estate. Well, why should I invest in your startup when you have a high chance of failure and I can just buy this house down the corner that went up 10x in value in the last 5 years? And in a lot of emerging markets, an index bet on real estate is a bet on growth. It's a safer bet in a lot of ways. It's a more distributed bet. However, I think we've found that real estate doesn't always go up forever, at least not in many cases. And if you've lived in the US, we've had at least 2 or 3 upheavals in real estate over the last 10 to 20 years. So the challenge is most startups fail, but a few startups succeed, and a very few succeed wildly. And this is why we say that actually building a portfolio is a way to diversify across the opportunity of startups and still take advantage of that occasional really big outlier black swan event. An interesting idea would be maybe to combine these two. Is there a way that I can combine real estate, which has a more traditional financial profile, less risky, and do that with startups? So imagine that I might create a co-working or an accelerator building where I put half of the dollars into the real estate, I put half the dollars into the startups. The startups pay rent to the real estate. The real estate owner has sort of a guaranteed stream of rental income. They may or may not make money on the investments in startups, but they'll probably keep the value of the real estate up or drive the value of the real estate up a little bit further. And then if the startups do actually succeed, then I'll have both wins. I'll have this real estate component that'll hold value and might increase because of the startups, and I'll have startups, at least on a percentage basis, win and increase my economics that way. Now, those of you who are thinking, how many people have gone through an accelerator or might even be running an accelerator? I think there's a lot of us out there. They're crazy people, basically. Running an accelerator, one of the most challenging things in the world. You want to invest in startups. Most of them are going to fail. They won't have an exit for 7 years. You've got to build an operational budget out of grants or sponsorship. It's a really tough bet. I would not advise you doing it unless you really love it, unless you're really passionate about helping startups succeed. In our accelerator program, we're just now, 4 years in, seeing a few companies get to 100 million plus valuations. They still haven't exited, so we might be 5, 6, 7 years out before we see the returns from some of our early startups in accelerators. And yet you still have to operate the accelerator. You still have to, figure out a way to pay rent, hire the people to run that. It's a very long game, and I don't think most people have thought through how long those economics take to work. So a lot of us are looking for sponsors. We're looking for alignment with either corporate or government or maybe even academic help that might have a little bit longer trajectory, hopefully a bigger, deeper pocket. And I think we need to focus more on specific areas of interest. So not that we're the accelerator for every kind of startup, but that we might focus on SaaS companies or gaming companies or IoT companies and develop expertise, particularly in those areas. And it'll also help you align with those corporate or government or academic sponsors much better. So figuring out the operational cost and running accelerators and making sure you're playing for the long game, not necessarily playing for the short game. If you're an entrepreneur who's looking at going into an accelerator, you should understand that they are going to be around and that community is one that will be there to help you in years forward. Building an equity culture. This one I think probably is still a challenge in India. When I worked at PayPal about 15 years ago, I was not an early employee. I came in about 2 or 3 years after the company was started, shortly before we went to an IPO and then subsequently got bought by eBay. And I didn't think I was going to make that much money. It turned out I made a little bit of money, not maybe a lot by Silicon Valley standards, but about $1 million, which, sometimes is life-changing money in the Valley. After half of that was taken away by the IRS, I had a little bit less left. I, had some fun. I bought a car for my mom and for a friend. I put a small down payment on a condo. And I had a little bit of money left over, and I was like really not sure what I wanted to do with that. And I was like, well, I looked over and saw Peter Thiel and Reid Hoffman and Ron Komi and other people investing in startups, and I was like, I'll do that. And I didn't know what the hell I was doing. I had absolutely no idea. I was an engineer and marketer, so I kind of had some sense of whether the company or product was good and maybe how to grow it. But I knew nothing about valuation, about legal, about asset allocation. And I put $300,000 into about 13 different startups over the next 4 years. Even stupider was I spent half that budget on the first 2 startups, $150,000 on just 2 investments, when I was the most stupid. Right? And then later, as I sort of figured a few things out, I actually had some really great opportunities. I was fortunate to invest in Mashery, in Mint.com, and SlideShare, I think many of you guys know, was acquired by LinkedIn. So out of 13 companies I invested in, and a few others where I was an advisor for, 3 of those outcomes were over $100 million. And turns out that, that was how I got started. Now, that never would have happened if I didn't have equity in PayPal that turned into some money and some peers that were doing investments in startups that allowed me to invest in companies that allowed me to get a start. So all of that came back to an equity culture at PayPal that was pretty widely distributed. I was employee number 250 or so. It wasn't just that the equity was captured in the founders or in the management team or even in senior directors. It was spread widely across the rank and file. Now, in many emerging markets and in many places, there's not a history of equity culture. You haven't 50 years of startups behind you like in Silicon Valley, and most employees don't care about equity, or they don't think it's worth anything. They don't ask for that, and they'd rather have cash. And for the founders, they don't want to give up equity. Well, my employee doesn't value equity. Why should I give equity to that employee? Why should I give them equity over their demands for cash? Well, there's no economic answer to this. It's really a patriotic answer for your country. That's how you're going to build your ecosystem. As important to having investors who are venture capitalists is to have investors who are entrepreneurs and just everyday people who support you. Most companies in the Valley probably don't get started on professional investors. They get started by angel investors who put in $10,000 or $25,000 and know a little bit about engineering, about design, and about marketing. So the reason Silicon Valley has exploded is not just because there's a bunch of venture capitalists in Silicon Valley or just because they're successful companies. It's probably the other way around. We started with a friends and family and an angel investor culture, and that continued to build upon itself and widely distributed equity in those companies. When those companies had an exit, the rank and file became angel investors. I did not know what the hell I was doing in 2004 to 2008, but I put $300,000 into the market into 13 companies. Now, I got lucky, and I learned some things, and I really enjoyed that experience, but a lot of other people probably lose all their money. There's not a lot of economic rationale for why to do that. Occasionally, you'll win, but it's such a tradition. It's so embedded in Silicon Valley that everybody believes, and it changes the psychology of that like entire community. I wanted to say nation in a way, but really, it's not that way in the rest of the US. Silicon Valley is just a small area. Maybe that culture is also in a few places in New York and LA. But it's not like everybody in the US is like making money on running startups or investing in startups. I grew up in West Virginia, arguably third world in America, perhaps an emerging market itself. And that's not how people thought there. It was not that everybody who was surrounding me was encouraging me to jump into startups. In fact, a lot of people on the East Coast are very conservative. So Silicon Valley is this special place where failure is common. People know that. People know that startups are not always going to win. But we all have this collective hallucination, which is we're all going to jump off the cliff together. And guess what? A bunch of you, I'm going to look to the left and look to the right, and I hope your parachutes fail and mine works. But they're going to like see that my parachute's working and jump onto my parachute, right? So we're all kind of jumping off the cliff together, knowing that probably not most of us are going to build that plane on the way down or have that parachute work, but one of us might, and we'll try and jump on the one that's working. And so when that happens, having everybody have a stake in that success and then a culture of passing that on to other people is really important. That happened at many companies in the US, at PayPal where I worked, at Google where my partner worked, at Facebook where friends worked. I think you're going to see that happen here now with Flipkart, Snapdeal, InMobi, a bunch of other companies. So it's important, even if you fail, to think about equity as something that you want other people to have. You don't want to play zero-sum games and be too stingy. Even if your employees don't necessarily want equity, you should teach them why it's important and how that is valuable and aligned with the company. And again, I think a lot of people feel like you're not successful until you go global. Everybody I talk to around the world is like, oh, we have some good startups, but, they're not ready to go global, or we really need to make sure that we go global to be a great company. And that's kind of bullshit. There's lots of great markets around the world that have 50, 100 million, 200 million people that are really, really big markets. And great, if you want to go to China, you want to go to the US and have billions of people, you can do that. You can even not go to those places and just market online products and go after them. But 50 to 100 million customers is a pretty good place to start. And in India, again, growing middle class, probably even 3 different markets. You have a high-end luxury market that's very well off. You have a large middle class that's doing a lot of consumer spending and growing in size and spend. And you have a very large, not necessarily poor, but lower income population that still needs to use services, needs to use the internet, probably wants internet access, maybe even has access to the internet, even though they don't have a lot of money to spend. But in the aggregate, they do. So I don't think you have to go global to be a great entrepreneur, and global markets are right here in our own back door. In fact, they're probably in our local province and in our local city. You don't need to come to Silicon Valley, just get Silicon Valley to come to you. And that's really where I'd like to end this, is that most people don't think they're as good as Silicon Valley, and it's not a physical place. It's really just a state of mind, right? Silicon Valley is everywhere. The people in Silicon Valley are not some special, different color, shape people than you. It's you. Right? Those people that I started a company with 20 years ago were South Indians from Coimbatore who'd happened to come to the Valley. They were Silicon Valley. I was Silicon Valley. Somebody who was a hillbilly from West Virginia. People from China, people from Brazil, people from the Middle East, people from Africa. Yes, there's a few white guys from Silicon Valley who happen to be born there, but that's the vast minority of people. Silicon Valley is you. So don't put it on some pedestal and think that it's any better than you. In fact, you're better than Silicon Valley because the conditions that you're building startups in are much harsher. They're much more challenging. You guys are better entrepreneurs than Silicon Valley. You're trained under tougher conditions. You're better than Silicon Valley. You have to believe that this is true. If you keep thinking that Silicon Valley or somebody in the US or somebody else is better than you, you're never going to get there. Your biggest challenge is not access to talent, not access to capital. It's access to your own confidence and the confidence of your peers. I can do this. They can do this. She can do this. We can all do this together. Right? It's confidence in knowing that the next entrepreneur, the next Flipkart, the next Snapdeal is sitting somewhere in this audience right next to you. And she is a brilliant young girl, probably about 14, with big dreams and big aspirations. And I want to invest in her. So you don't have to go to Silicon Valley to be big. You don't have to bring Silicon Valley to you. It's just in your head. A lot of the success in Silicon Valley came from other parts of the world, whether physically or digitally. That big problem of confidence, we can solve. There are amazing successes coming from all over the world, big companies from here in India, and I'm really excited to be investing in India. So thank you for your time, and go build some startups.